after almost a decade-long slumber, the power sector is suddenly charged up. Call it the mega trend of energy transition or the positive policy action. There's a lot of interest when it comes to the private investment, and all of that is visible in the stock markets as well, with power stocks seeing a lot of interest. But one of the companies that was able to glean into this opportunity of energy transition well ahead of others was JSW Energy, and steering it from the top is, of course, the joint MD and CEO Prashant Jain. Prashant, hi, thanks so much for speaking with ET Now.
Thank you, Anisha. Thanks for having me.
You know, I have to put it on board. I've been meaning to get your time for almost a year. You've always been busy. Tell me, what is keeping you busy?
So a lot of action because, I think probably after 7-8 years of the almost no growth, we have been seeing a lot of growth in our business. Last 24 months, we have put approximately 32,000 crore rupees on the table, which has been put into the motion, and that's where I have been very, very busy. And apart from that, and now I'm seeing that there is an opportunity that we will continue to grow for next 10 years and probably at more than 20-22% growth rate for next 5, 7, 10 years. So it's a lot of action, and which is keeping me busy.
A lot of action, and that's good kind of action that's keeping you busy as well, and a lot of action happening in the country itself when it comes to the power transition, right? I mean, from the longest time when we were seeing those single-digit growth rates in power demand, we are very close to double-digit now for many months now. The per capita consumption of energy is still very low. If you go anything by what government is trying to do with the manufacturing push, the demand is just going to accelerate, right? Do you believe this double-digit kind of growth rate can sustain?
That I'm not sure, but typically you have been, I'll give you the idea, like last 2 decades, the power demand elasticity to the GDP has been 1:1. But a lot has changed in last 2 decades, like there is a complete electrification which has happened in the entire country. The second is the transmission and distribution losses are behind us. The energy efficiency drive is behind us. All that has eaten out some of the power demand elasticity. So probably I am going to see that 1.2 to 1.25 times of the power demand to GDP elasticity. If GDP is going to grow around 6.5-7% over next 1 decade, then power demand can be there around 8 to 8.5%. But even if you are being very conservative, you will be seeing 6.5-7% power demand as compared to what you saw 5% in last 2 decades.
Yeah, so at least that 5 is going to be at least 8 or 6 Correct. At least for going forward. But that was the demand side of thing. The other side is supply. That, remember last year we were having the conversation when you told me that the supply is not catching up to the demand. And now we are facing that problem. There's a huge demand-supply mismatch. How long do you see this continuing as well?
It's a big question. So, last month we saw the peak power deficit, which was close to 10.5-11%. The same deficit we saw in 2004-2005. But remember, 2004-2005, our grid was around 75 gigawatt. Today, 200 gigawatt. So the same percentage of the power deficit at 200 gigawatt, you're talking about 20 gigawatt. It's a meaningful thing. India is facing 2 challenges. One is energy transition, second is incremental demand. India is the 3rd largest power market in the world, but the fastest growing in the world. Now, if you are talking about even 7-8% demand growth, you're talking about 17-18 gigawatt, and if you want to meet that by fossil fuel or a balance of thermal plus renewable, we're looking at a huge capital investment which has not happened in this particular sector. So it's a big challenge now. On top of it, you are talking about energy transition.
Yeah.
Now, large corporates, they want to move away from fossil fuel to renewable energy. Second is India is also having set a net zero target. There are the large refinery complexes, industrial complexes who want to set up more and more incremental capacity. All that put together is creating a big challenge in front of us. So enough has not been done in last 1 decade in terms of the capacity addition, because we were steering at some point of time over capacity. But that has got absorbed. But now it's an immediate challenge, and which will get mitigated. But yes, it's going to be a little cold winter for next 3 years. And probably after that it will start easing out, but next 3 to 5 years are going to be a shortage time.
Wow, so 3 to 5 years, because of course overnight you can't put up a power plant or even the renewable energy units as well. But the merchant tariffs as well, as a result of this demand supply mismatch, had shot up quite strongly. Even right now they're very close to 6 to 7 rupees. Do you expect that trend also to continue, and hence merchant sales are likely to kind of benefit?
Yeah, that will remain elevated because two factors one needs to see. One is the international coal prices have been on a higher side. They went as high as $300 a ton, came down to 100, now again at 130. So international prices are higher. Inflation is high. So the variable cost, fixed cost to produce power is already hardened.
Would you be participating in it as well, or your focus is completely into renewables now?
Will be participating because it's like water, where wherever a little bit of more better profits, we would like to be there, but not the substantial capacity. So what you can say that incrementally whatever we are going to put is not going to be 100% of thermal, but
Sure.
yes, 10-15% of incremental capacity will be certainly coming in thermal space because we see a good opportunity. Recently we did one acquisition where we have got a foothold on a pithead plant in the Odisha,
Yeah.
where we are located at the mine where fuel prices are going to be the lowest in the country, and this is a 700 megawatt plant. So this could be an anchor at this location itself. We can add 2,000, 3,000, 4,000 megawatt of the thermal capacity without any hesitation, with a lot of land and water and everything available, infrastructure available to us. And then coal price will be the lowest in the country at that particular location. The another piece I see is a thermal power plant where we are having in Rajasthan, which is based on lignite. There is enough lignite is available to double that capacity in time to come. And incidentally, in the last budget session, government of Rajasthan has also talked about that they would like to develop that capacity. The demand is growing. So these are the two places where I see the opportunity that some capacity we will be adding up in thermal space.
So largely brownfield, right? Not looking at maybe bidding for a fresh greenfield or something.
Yeah, it's going to be brownfield, but these will be the new plants, and will be one of the most profitable plants because both are backed by captive coal like kind of a situation, and on the pit head.
So about the 700 megawatt plant, I think one of the units were going to be started in the month of October itself, right?
Yeah.
Is that on track? And I think the other was going to be there by March 24. So what's the timeline of commissioning of that?
So both are on track. So maybe a couple of days here and there, or 1 or 2 weeks here and there, those kind of bottlenecks can come. Like we have already fired the boiler last week in that unit, and I am getting the feedback every day that things are running pretty good, but there is a bit connectivity thing which is we are trying to sort it out. Otherwise, plant could have started in next 10 days time.
A lot is in the pipeline when it comes to your renewable, whether it's SECI 9, 10, 12, wind energy, etc. All of those are likely to come within the next 12 to 18 months itself. Beyond that, because there's a bit of a lack of visibility on your book beyond December 24.
Yeah, so there is a lot of work which is going behind the scene for us. So the day I sign a PPA or I make a bid, I have to build a project in 18 to 24 months time frame. So I have already done a lot of work on that side, but we will be announcing that just shade below the when our book is getting over, because I have to complete it in the next 24 months time frame. So if I sign something today, for example, if I make a bid in SECI and I sign it today, then I have to deliver it in next 18 months time frame, and then I'm already having enough on my plate for next 12 to 14 months time frame. So when you will be reaching around that kind of a time limit, you will be seeing that enough announcements are coming up. We see a strong visibility for our group captive requirement because JSW Steel and Group is growing very rapidly in terms of their capacity, and so incrementally they are looking for power coming from the renewable resources. In addition to that, there are energy transition requirement also, because they are also looking to reduce their carbon footprint. And lastly, it is more economical for them to source a renewable energy as compared to using the fossil fuel, because entire JSW Steel plant locations are such that they are dependent on imported coal. And today, if you look at, if I give you some color, the variable cost of the power produced from the imported coal is in the range of around 5 rupees, plus the fixed cost. Plus this power tariff is going up every year because of the rupee devaluation, then the railway freight going up, port charges going up, sea freights going up, inflation altogether. So this levelized tariff is going up every year because of this inflation and currency fluctuation. So it's very, very economical for them to go for energy transition. So I see that a majority of my capacity expansion will be coming from the group captive, and part will be coming from the third party tenders.
Split it for me. So going forward, what kind of incremental capacity will be coming in on account of group versus third party?
So last 4 years, we saw 70% coming from third party, 30% from the group. Maybe next 5 years, it will be 50-50, or maybe a little shade higher for the group captive, because we see a immediate requirement, and rightfully so also, because I am seeing that in terms of the third party tariff bidding, sometimes it is not making sense because of the absence of a discipline which people are demonstrating in the tariff, what they are quoting without application of the thought process that power is a very, very tough subject to maintain the cash flows for a period of 25 years, and then they start making the project at a wrong footing, and then it becomes a bit challenging. So we are very disciplined in that regard, and I don't want to see that JSW Energy get on the wrong side.
So should I assume that there would be an equity raise in the near future?
Yes, it will be there, because whatever strategy 2.0 we talk about is without any capital raise. So, but we see that we have a opportunity, given the size of opportunity, given the execution capability we are having, and given the position where we are coming at this point of time, we feel that there could be an opportunity to do a capital raise at NEO level, and we would like to do at opportune time at a right valuation, which is accretive to the shareholders, and deploy that for the incremental growth.
That gives me a good opportunity to take a short break on the show. When we come back, we discuss what's happening with the storage business, because that is the new energy transition that everyone is talking about. Welcome back. We are still in conversation with Prashant Jain of JSW Energy, trying to understand what happens with this strategy 2.0, because you've got big targets that the board has given you, making the profits 3x, making the operational capacity almost 3x. How are you going to achieve that? What's the roadmap to achieve that by 2030?
So we decided, based on the strategy 1.0, we were doing pretty good in terms of the execution. We got satisfied with our development of our capability. As I talked about that, team worked really very, very hard, and we realized the size of opportunity is also improving, because not enough execution is being done on the ground by most of the other players. So we realized that we are generating more cash and we can capture a little more. So we upgraded our targets in terms of the execution capability, and we realized, other than generation side, there is a huge opportunity which is coming in our way, is by pump storage. We have been working on this piece for last 24-30 months time frame, and we saw that it is absolutely on the anvil, and we took a plunge and we decided that in addition to adding another 10 gigawatt of the generating capacity, we will be doing 40 gigawatt hour of the storage also, which will be coming both from BESS as well as PSP. And now team is working round the clock for that, and then we are seeing some bids have already come. We have taken some small plunge in that, and incrementally more bids will be coming. And as I said, that combination will be group captive as well as third party bids, and I'm sure that we will be doing better than what we have guided for. So very soon you will see that strategy 3.0.
Wow.
Once we see that we are doing better in terms of execution on strategy 2.0, then my wish and my target is that I should come out and say that yes, we are doing better than strategy 2.0.
So let me start with BESS. What's the timeline of that coming on board? And if I have it right, 60% capacity right now is tied up. What about the rest of the 40%?
So it will be coming up from the date of signing the PPA. It will be 18 months, and we are expecting that soon this PPA will be signed, and then we will
How
be coming.
soon?
Maybe you can say it's a matter of couple of months within this
Okay.
financial year, and then we will be coming up in 18 months time frame. So I see that by September 25 or June 25 this will be up and running. And the configuration was 60% tied up and 40% was open, but we are going to keep that open. We're looking at the ancillary market at this point of time, and we see a good remunerative
Merchant trades.
opportunities where we would like to capitalize at this point of time for that BESS opportunity.
Okay, and the PSP one was largely given to PCKL, right? That
That's
was already
right.
tied up.
And,
the
and
timeline
also
of that?
we will so that also is going to be 3.5 years.
Okay. And the financial closure in the PPA sector were pending
So
for that, right?
that's pending. So
Okay.
once PPA is signed, then we will be doing that. So we are expecting that should also happen sometime this financial year, and then post that 3.5 years it will be taken.
Are you looking at getting into a lot of backward integration as well? Because with solar, we have seen that you're doing the wafer and the manufacturing cell, etc. Even for this battery, are you looking at doing the backward integration and setting up a battery manufacturing unit at all?
Not really, but yes, JSW Group is having ambition in terms of EV, and in case that is fructifying at some point of time, I see there could be a synergy for the JSW Energy to look at battery manufacturing facility, which will be primarily on the basis of automobile requirement. And that time we would like to evaluate it, but right now for a supply chain for BESS project, we are not primarily looking at battery manufacturing.
Sure, so that could happen at a future date as and when the group dynamics change. But for EV infrastructure itself, are you doing a lot? Because we're hearing your peers and competitors do a lot in terms of setting up the EV charging infrastructure. Is that something you are getting into as well?
No, we are not. I see there are the huge opportunities everywhere in this particular space, but we don't want to concentrate every space.
Are you looking at some sort of, given the fact you're talking about the group has the ambition of getting into the EV as well, is it going to come your way? Because there have been talks about MG Motors being in the fray, looking at, picking up some stake. Will it happen at the group level, or Energy will be directly involved with that?
No, Energy has nothing to do with that. As we have spoken last time also, that JSW Energy is concentrating on the energy side of it, and but group is looking at it, and it will be a separate private company. No listed company is going to be entering into EV business.
Sure. But other than that, you did recently a Mitra acquisition, which has been scaling up well. In fact, if I remember right, the target was 1250 crore EBITDA this year, 1650 crore next year. On track or better than that also, because you've been beating the targets for us?
Yeah, we'll do better than that.
That's good to hear as well. But any other acquisitions which are lined up in the pipeline?
So again, like we are growth hungry, and we see quite a lot of opportunities in the sector, and I'm seeing that This renewable space is dominated by lot of developers who are backed by financial investors, and their fund life is coming to an end. And I'm seeing enough opportunities are coming in the market for consolidation, and I feel that at a right value, JSW Energy is a buyer, and we continue to evaluate most of the opportunities if they are available on a right valuation for us. So if anything come our way, we will be certainly keen to do that, and we would like to play a dominant role if the valuations are right.
And the hurdle rate will be the same, mid-teen kind of returns is what you're looking at? At least
what
that's the target.
That's
right?
the target I have always in mind.
And just wrapping up the conversation with the last few questions, recently we saw GQG getting into the company as an investor. That made quite a few headlines. Are you speaking with any more such investors? And I think the reduction happened from the promoter level, right? Is there something else in the pipeline?
So it's a secondary transaction. So people come and meet the management
Sure.
to understand the business very well. But whatever is done by them is their call, or whatever is done by the promoter is their call. So we are not privy to those kind of a conversations and strategy. But yes, power sector after probably more than a decade is in flavor, and so I am seeing more inquiries by the investors what I've seen in last 5-6 years. So that's for very much I can see that, and people are very keen to meet the management and to understand what is happening in the sector. But whatever is going to be their bet, it depends on their strategy. So it won't be, I don't know about that and won't be in a position to comment about it.
I hope this answers a lot of queries of those investors as well, and you will have to do less meetings. But you know, the analysts are talking about target prices of 500 rupees, 600 rupees, etc. Anything that you track or you're looking at?
So I always track my cash flow and my returns. So that is where I am focused about it, and also I am focused about the execution, whatever we are talking about. And so my focus is continuously on the growth
and the strategy 3.0 that you're going to bring,
and
right?
execution and the cash flow returns. That's what I am focused.
Could green hydrogen be as big a transition that we saw from thermal to renewable? Do you think it could be that big a macro trend?
Much larger, because you know it's a combination. It's a I will say it's a exponential of that, because to produce green hydrogen you need green energy first, and then green hydrogen. So it's a combination of everything. So very large capital expenditure is going to be deployed for everything, because to produce green hydrogen you need solar, wind, storage, then you produce green hydrogen, then you put another piece of CO2 capture. So it's a large ecosystem which will be created, and I think India is going to see a huge work on that side.
Thank you so much, Prashant, for making time and speaking with ET Now.
Thank you. Thanks for having me.